whole bunch of stocks, and this morning I've collected a few that are actually not too bad to say the least. We'll start with one standout performance, and it's Ashok Buildcon that I quickly want to highlight. Very, very strong earnings came in from Ashok, multifold rise on every parameter. Revenues were up 15%, EBITDA was 66% higher at 905 crores versus 544 crores in the same quarter last year. Margins have stood out phenomenal, right? This is increased to 36.35% versus 25.25%. This comes in at a time when most of its peers are concerned and complained about the fact that order books were declining, order wins were slow, but Ashok Buildcon, in a world of its own, reporting numbers that have beat the street expectation. Net profit also was up about 300 times at 462 crores versus a 107 crore number that was seen in the same quarter last year. So even if the market is weak this morning, Ashok Buildcon could be on the winning side. BSE, if we haven't talked about this enough already over the last couple of months, the numbers support how much euphoria is surrounding this counter. Valuations apart, solid earnings from BSE. Revenues were up 23%. EBITDA was up 37% at 389 crores. Margins were up 543 basis points, which is 52.14 versus 46.71. Largely in line with what the street was expecting. Net profits were also up 31% at 346 crores versus 264 crores. KNR Construction, again, good numbers. Revenues up 90%, EBITDA up 300% at 870 versus 231 crores. Margins have also expanded, over doubled, in fact, 44.7 versus 22.25. Net profit is up about 3x at 580 crores versus 143 crores. There's a small exceptional item, but it's so small, but still worth the mention of 15 odd crores. So, Neeraj, I've got three amazing stocks. Ashok Buildcon, great numbers. BSE, of course, delivers quarter on quarter. And KNR Construction, phenomenal.
Yeah, truly phenomenal. I mean, I was just saying this on the digital trade setup, that this is probably the largest EBITDA margin expansion that I've seen in the current earnings season.
Double down, and they don't seem to be concerned.
Yeah, excellent numbers. Unfortunately, PNC Infratech didn't follow suit, but we'll get to that in a moment. My top three, starting off with PNB Housing, because it seems that the stock will have a bit of a slow start or sluggish start today, because there is a block trade of $273 million and the offer is at a floor price of $939. The current market price is $983. I suspect that this could start off weak. The question is, will it continue or no? Remains to be seen. But for now, it does seem that PNB Housing could have a bit of a weakish, sluggish start. So do keep an eye out for that. Polyplex is the other one on my list. Volumes are a bit of a concern here, but revenues up 10.6% at 1739 crores. The estimates were 1572 crores. EBITDA margins at 11% versus 7.7%. Good margin expansion. Not in the KNR league, but good margin expansion for its business. And net profit as a result of which 164 crores versus 48 crores. That's more than a 3x jump in net profits. So do watch out for Polyplex in the session today. And I want to, we have been talking about a MedPlus and a Sula, but in my top three, I'm taking MedPlus. We'll talk about Sula in a moment. But MedPlus Health, that's the third stock on my radar. Revenues up 11.93%, in line with estimates, you argue. EBITDA margin, though, 190 basis points higher. On that base, it's a strong jump at 7.86% versus 5.96%. Even for this business to clock in these margins is not easy. And therefore, net profit up a whopping 178% at 39 crores versus 14 crores. The estimates were for doubling of net profit. They've nearly trebled. And why has this happened for MedPlus? The store level EBITDA margin is now at 10.2% versus 9% because the private label share has gone up from 14% to 18% YOY. Typically, if a retailer can have more private labels sharing, then that would be construed positively. So do watch out. MedPlus, that looks solid. Polyplex looked good. And PNB Housing, because of that block deal, might start off lower.
Yeah, I just want to quickly add Gujarat State Fertilizer to it. And this is because most of the fertilizer stocks this quarter have actually done well. This one, from the look of it, is an aberration. Pretty sad numbers. Profits were down 3.5% to 298 crores. Revenues also declined nearly 16% in the quarter for Gujarat State Fertilizer. to come in at 2,635 crores. So it's a good possibility that the counter could be on the sell side in trade today. Neeraj has already talked about that big block. It's significant. 9.5% is the stake sale we're looking at an offer price which comes in at a discount. Tata Chemicals, I want to quickly mention because their subsidiary in Europe is looking to invest 655 crores to build out a 180,000 ton per annum pharmaceutical grade sodium bicarbonate plant in the United Kingdom. This could be viewed as a positive. It's an aggressive expansion plan. We'll understand what the potential of this plan is in terms of contributing to the top line and the kind of market share that they would be eyeing post this. But for now, it's definitely should be viewed as a positive news flow. So that's what we have, a whole bunch of counters. Like I said, you've got two big companies that will be listing on the exchanges, Swiggy and Acme Solar Holdings.
Yeah. Okay. Now, I just want to mark, in addition to Samina's stocks, just two more stocks, or maybe three more, which are important and should be watched out for. So, first one is EIH Hotels. We know that hotel companies largely have given a very good quarter. EIH revenues were up 11% at 589 crores. The estimates were 509. So, thumbs up there. EBITDA margins expanded at 29.71. Estimates were 26.3, as a result of which a 41% uptick in net profits. So 133 crores versus 94 crores. I'll not talk too much about Varun Beverages because we're going to get you a brokerage note on Citi on Varun Beverages, but effectively they've done an acquisition and it's an important one. But I'll let my colleague Mahima maybe come in and talk about that because it's an important one. So keep an eye out for that. But I do want to talk between Bosch, Greaves Cotton, and a PNC and an NMDC, all of which will be weak. But I want to talk about Sula Vineyards specifically because that one has looked like a weak quarter. We're going to be talking to the management in a bit. But look at those numbers from Sula Vineyards. Revenues down 1.5% at 132 crores. The estimates were 132 crores. EBITDA margin is down 782 basis points at 25.75 versus 33.58. Granted, the estimates were 22% and they've done better than estimated, but it is a very weak quarter. And as a result of which, a 40% downtick in net profit at 14 crores. Again, granted, better than estimated, but a weak quarter. And this is a YOY comparison. So you can't argue that, oh, monsoons were the reason, because monsoons were the reason last time as well. So we're going to be talking to the management about what is it that could help the stock, because clearly for the last many quarters, the revenue growth has been anemic, and which is probably what is showing in the stock as well.